Good morning. Hello and welcome to a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I am Prashant, with me, my colleagues Sonia and Surabhi. Good morning, guys.
Good morning.
I just have one thing to say. I was off for a week. What did you guys do?
No,
decided to shake it up a little bit for you.
Forget about all that. I mean, welcome back, of course. There's
Sonia.
so much that's happened overnight, and you're like gone from heaven to hell, right? You were traveling?
I was traveling. I was in Orissa, and a wonderful state. And I mean, I'd heard a lot about it, so we wanted to go. And a short break, and we want to go back. So
we wanted to throw in, a little more masala when you come back. Till you left, we're talking rates, yields, dollar. Now we're talking bank failures, keeping it very active.
Oh, it happened that Friday, right? I mean, it's quite incredible. But there's already resolution. That's the thing,
That's
right?
the good thing,
So in three flat days, we've gone from crisis
to collapse
to a resolution. Hopefully a resolution, right?
Yeah.
So let's actually, for our viewers, put this out in some detail, because this is news. This has come in this morning, and a lot of you would be waking up to this. What has happened? Of course, Silicon Valley Bank and what has happened to it needs no fresh introduction. But this morning, Treasury, Federal Reserve, and the Federal Deposit Insurance Corporation, which is the depository in the US, have issued a joint statement. And they've basically announced measures which will protect all depositors of Silicon Valley Bank. This was the major concern. And this is important. All depositors is important because some depositors were already insured. So FIDC, the depository in the US, insures deposits up to $250,000. But the statement makes it clear that this is for all depositors, everyone at Silicon Valley Bank. So this is the latest. So the government has stepped in, as many were asking them to do so. And that is the fresh news this morning. As I was saying, the pace of this thing has been incredible, right? Last Wednesday, we had this bank run, right? The first of the news that we heard from Silicon Valley Bank came into prominence. On Friday, the company collapsed and it went into receivership. The government took over the bank. And this morning, we are basically looking at a possible resolution. That's how fast we say markets are fast. But in this case, I mean, what has happened has also been extremely quick-paced. So, just want to kind of highlight how we have done. Now, to kind of tell you the impact of all of this, right? I mean, how are US futures doing? The last I checked, you had the US stock futures, which was up about 1%. The S&P 500 futures, basically. The 10-year yield had sold off very aggressively on Friday, and that remains under pressure, which is a good thing. And the dollar is well behaved as well. The rates are on your screen right now. The dollar index at 104.3 and the 10-year US bond at 3.69 or so. The question is, on Friday, US markets sold off very aggressively. And this morning, we are waking up to US futures, which are higher. So, has Friday's mood and sentiment been completely put aside? Is that behind us and we need to look at the fresh cues? And I would say the answer is a resounding yes. The government has stepped in to save the bank. We'll see whether this is enough, what they've done is enough. There was a Treasury official in the US who basically said that there are similar issues at other regional banks. There could be similar issues at other regional banks, etc. as well. So is this all that is needed? I think time will tell. The bigger debate for markets and for us here in India is this. Does the Silicon Valley Bank issue derail the Fed from its inflation fighting track? What do I mean by that? Last Tuesday, we heard from Powell sounding all hawkish. Yields went through the roof. The 2-year was above 5%. And then this happens, which needs the government to step in. So from financial tightening, which markets were expecting, government stepping in and making depositors whole is, in a way, financial easing. Will the Fed really want to press the pedal and hike rates by 25, 50 basis points on 22nd of March, given what has happened? And I think the debate on this one is, it will be very much alive till we actually get the decision. The jobs number, which has been it came out on Friday, by the way. We would be starting the show usually with this. It was relatively uninformative, neither here nor there. It was strong, but it also had parts which were weak, which is a good thing. Tomorrow we get the CPI numbers, consumer price inflation numbers, and I think that in some way should give us some more idea about what the Fed will do. So, as I said, the debate is on, but I would say this, it is possible for authorities to step in to contain a particular situation without getting distracted from the larger objective, which is getting inflation under control. It's not as if this was a systemic issue. This was one bank mishandling its business, not managing its business properly. So it's isolated in that sense. This is not systemic. I heard things like Lehman, etc., thrown around over the weekend. I mean, this is not that. I think let's be very clear about that. The government has stepped in, contained the issue. Can they go ahead with their aim, stated objective of bringing inflation under control? We will find out. Maybe, they won't do 50. Can they do 25? Sure, they can. Although there are already calls saying that they will back off. They won't do. They will let the situation settle and then do something in the next meeting, if so necessary. But this is the big debate. Now, let me quickly put out some levels for the market here, for the Nifty here. So the Nifty rallied from the low of 17,255 and retraced the 61.8% of the previous fall. It hit the 61.8% mark and then has retraced. We saw a bearish engulfing pattern, which is, as the name suggests, bearish. We've seen follow-up selling on Friday. It basically indicates a short-term reversal for the market. I'm not changing, the setup based on what has happened this morning. I'm just going by what the price action is telling us. There are resistances. If we do see a bit of a dip buying earlier on, SGX is indicating a flattish start. The resistance is at the 20-day moving average at about 17,664, and then the 40-day exponential moving average, which comes in at 17,747. So, those are levels that you need to be cognizant of. They're about 200, 300 points away. The SGX indicating a 20-point flat kind of start this morning. Sonia.
Absolutely. I think there's some semblance of sanity this morning, right? Yeah. After all that happened in the last 48 hours. And the US government stepping in and saying that no depositors will lose their money. In fact, come Monday morning, all depositors will have access to their money. I think it's really brought about a lot of calm into most global markets. In fact, the Dow futures are also in the green, as we were pointing out earlier. But a couple of questions, right? Our own markets have been under pressure. So we're heading into this, we went into this event quite weak. So the big question is this: it may not be a contagion, it may be, but will it have any spillover impact on maybe the tech world globally, maybe the startup world? You never know. So that's the big question that we're going to be posing to our experts this morning. But for our own markets, just a couple of things. The short-term trend continues to be on the weaker side. So last week, the Nifty lost about 1%. It has closed below the 200-day moving average of 17,427. So this morning, although the SGX Nifty is indicating a flat start, do we sort of reclaim that 200-day moving average, given that the sentiment is on the weaker side? Only time will tell. The next support, a very, very firm support for the market, is a February low, which is about 17,255. So in that context, that continues to remain a firm line in the sand. Today, of course, there could be some volatility through the course of the day as we get a lot of headlines. For now, of course, the US regulator has approved that plan to backstop both depositors and financial institutions associated with Silicon Valley Bank. But we'll be getting, news flow through the course of the day. Just a couple of more things to watch out for. The US 2-year bond yield saw its biggest 2-day drop since 2008. So there's a lot of impact that we're seeing on the bond market as well. And of course, Surabhi will talk in greater detail about that. But Treasury Secretary Janet Yellen has said, of course, the statements came before the government decided to step in. But, just a couple of things as we head into this week. One, of course, FIs continue to sell. So whether that pattern continues is something that the street will watch out for. There was a large sell figure, over 2,000 crores of selling is what we saw on Friday. And Tuesday, Wednesday, we have two data points that come in. There's the US CPI data on Tuesday tomorrow. There's the US retail sales on Wednesday. And that will lead up to the FOMC meet on the 22nd of March. So a lot of data points coming through. Give and take everything, it looks like, the start is going to be flat. The US government statements have sort of soothed nerves for now. Yeah. But this is still an evolving story, so there could be a lot of volatility perhaps.
Oh, absolutely. Take your point on that, Sonia. And I think that was a big talking point right through Saturday, that they have to get a grip on this very quickly. Yeah. Otherwise, there are issues. While it's not, it's the 16th largest bank, right, SVB in the US, 200 billion in assets. But the bigger question was that if people don't have access to deposits, how do you make payroll? The kind of sort of domino effect that plays out. So at least that seems to have stopped for now. Just a reference to the quote that you mentioned, of course, was before the
bailout. The government stepped in, yeah.
But I think we got an indication, right, when she made a reference to the 2008 financial crisis, saying, and I quote, "Let me be clear that during the financial crisis, there were investors and owners of systemic large banks that were bailed out, and the reforms have been put in place means that we're not doing that again." So that's the stated intent of the government. But let's see. By the way, crypto assets are rallying big time because of the bailout of the other bank. Right now, you've got a 9 to 10% gain on Ethereum, on Bitcoin. So it's all over the place in the crypto markets as well. The yield point is phenomenal. The 5-year yield, remember last week we were talking about how it's getting harder and harder above 5%. There's almost a 75 to 80 basis points drop from those levels on the US 2-year, beg your pardon, and the US 10-year continues to cool down as well. I just want to talk about how we sitting here in India are going to map this impact. Look at a company like Nazara. Now, we all know what Nazara announced over the weekend. The amount is not big at all. It's only about 64 crores for Nazara through 2 of their subsidiaries. But the fact is that there are interconnects, and the impact travels very, very quickly. So therefore, even here, I mean, I'm sure a lot of, startup, entrepreneurs and the entire ecosystem sitting out of Mumbai, Delhi and Bengaluru will be watching the developments very, very carefully. We'll be speaking to Nazara as well as we go along. For the time being, it's very interesting. The SGX Nifty, let's pull up the SGX. It's actually not showing a massive drop whatsoever. So let's see if the Indian market can really take this in its stride, because we have a very definitive resolution, and whether the buyers are going to come in. So the SGX is actually taking it in its stride very, very well and fairly sanguine. That's just a 10-point drop. Not sure if that's how it plays out, but well, that's what the screen says.
Oh, by the way, the Oscars are on, guys. The Elephant Whisperer is one an award as well. I haven't watched it. I don't know if any of you have caught it, but I've heard it's an amazing story, and lots happening, so lots to celebrate on the Oscars front.
And Natu, let's not forget. It's keeping the world grooving no matter what happens to the banks or to the yields.
Okay, well, lots to talk about, and through the course of the next 2.5 hours, we'll be doing just that. For now, there's some semblance of sanity and absolutely flat on the SGX Nifty. But on the equities front, we have a comment coming in from Alexander Redman of CLSA, who says that Silicon Valley Bank's collapse represents the first major victim of the tightening cycle and raises concerns about unrealized losses on fixed income securities held by US financial companies. He says increased balance sheet caution may suppress the US loan extension, pushing the credit impulse deeper into negative territory, consistent with negative momentum for US equities. He also says the direct implications for emerging markets are limited to a number of Chinese and Indian startups banking with SVB. He adds indirectly the greater impact will be from elevated risk premium as the market digests the fallout of SVB. He retains the S&P 500 year-end target at 4,000 and reiterates the outperformance call for emerging market equities.
Well, some money market views now. On the rupee, B. Prasanna of ICICI Bank says financial stress in the US due to a bank failure and the mixed jobs report led to significant risk off in global markets, leading to lower dollar yields and lower terminal rate pricing. As a result, the dollar retreated against Asian currencies, while the rupee, though benefited by seasonal inflows and improved current account deficit outlook, which was largely range-bound due to RBI and OMC's buying dollars. He says this week currencies will take cue from US CPI print. He expects the dollar rupee to trade between 81.6 to 82.6 to a dollar range.
Okay, let's talk about the bonds. On bonds, B. Prasanna of ICICI Bank says global bond yields moved sharply lower last week owing to the risk-off sentiment and a break in robust economic prints. Back home, local yields also eased with the flattening bias as duration remained the flavor. Prasanna expects positive momentum to continue with the 10-year benchmark trading in a band of 7.3 to 7.5%. Okay, well, we have a lot of stock-specific action to track today as well, and big headlines there. We will get to it in just a minute. In our top 10 segment, we're looking at the Adani group of stocks, at Tech Mahindra, Sona BLW Precision, Lupin, Godrej Properties, ICICI Lombard, and Hindustan Aeronautics. Those are stocks on our radar on the back of positive news flow. Infosys, IndusInd Bank, and Mahindra CIE on the red side today, and we'll tell you why in just a bit.
All right. Well, our global guests are with us. Rupal Bansal